What a brutal weekend, and what a brutal weekly close on Bitcoin. In fact, that weekly candle is one of the biggest weekly candles down that we've seen in a long time. And for the altcoins, it was much, much worse. And the reality is that as bad as it was, the reality is that potentially this could get a whole lot worse, because I don't think this is coincidental. I think this is all part of a major plan by Trump to kill markets. And I actually think that crypto is just a side effect of actually killing markets. I'm going to spell out the plan for you. I'm going to show you how I think Trump is playing a game to manipulate markets, and how crypto is going to unfortunately suffer for a whole lot more. And unfortunately, if you think this is going to end in a matter of days or weeks, I think it might take a whole lot longer. So that's what today's about. It's not maybe the easiest show to do, because everyone just wants, yeah, bro, we're going into a bull market, we're going into a bull market. But the reality is we have to tell it to you exactly how it is. So if that sounds good to you, I need you guys to subscribe to the channel. I need you guys to obliterate the like button, and let's get the show on the road. Okay, let's get this time change thing out of the way. So you'll notice, or some of you may notice, that we've started the show an hour earlier, right? If you're one of those people, just say in the chat, yes, you started the show an hour earlier. The reason why we started the show an hour earlier is because we follow United States times. And yesterday, the United States clock changed to daylight savings time, or the other way around. Now, the truth is that Europe hasn't changed yet, and some countries never ever change. But this is now the new showtime for the next 6 months. This is now the showtime. So if you missed the live show today because you were late, just set your clock back 1 hour earlier. This is now the new showtime because of daylight savings time. In Europe, your daylight savings time will kick in on the 30th of March, and then it'll be the same time as it was on Friday. Okay, so you understand why we are actually early, right? Amazing, amazing. So someone says run finally on time. Someone says, yes, very, very early. You understand that it's the clocks that have changed in the United States, and we follow a United States clock, and that's why this is all happening. So now that that's out the way, and you all know to be here and to say present an hour earlier tomorrow, for those of you who are not yet, for those of you who are watching this on replay, who should have watched this on live but never watched this on live because you know what's going on. Anyway, big show today. I mean, I was going to do a show around altcoins and whatever else, but the truth is I think we have to address what is actually going on, and I think it's part of Trump's major plan. I'm going to show you what Trump's plan actually is. I'm going to show you why Trump has got a plan. And then I'm going to show you how long this thing can actually last, and how low we can actually go. The thing is, I wish I could say to you, listen, I think the pain's over. I think you should buy the dip. Truth is, I don't think it's time. And I think there will be a little bit more pain, or maybe even a lot more pain, as this whole master plan actually plays out. So if that sounds good to you, I need you guys to obliterate the like button. Let everybody know that we have started the show, even though it's an hour late. And let's actually get into the alpha of the day. I think let's start off by looking at the weekend. Just look at that horrendous weekly close. When you look at this weekly close, it is one of the worst weekly closes that I've seen. In fact, I went back to see when was the last time that we got a $14,000 weekly candle. And those were, once we had them here, and this was the first dip in the last bear market, in the last bull market, and this was the beginning of the bear market. This is, I think, the collapse of Luna. We got a $17,000 candle. So this candle was actually pretty brutal. To make things worse, when you now look at it back on the daily, what you'll see is that Bitcoin now closed a day below the 200-day simple moving average. So from a technical point of view, not a good sign. Not a good sign. What we see here is not exactly encouraging. That's Bitcoin. If you're holding alts, or if you have been holding alts, it was an absolute bloodbath. And to make things worse, the problem is, because there's no liquidity, because there are no buyers for the alts at the moment, on the weekends, when there's even less liquidity, that's when they go out and do liquidity hunts. And that's why, like, in the last 24 hours, we shouldn't have had liquidations. And there are $651 million worth of liquidations. In a low liquidity market, you got to be very careful of liquidation risks. You got to be very careful of market manipulation, because there's going to be market manipulation. Why? Because it's so easy to manipulate the markets, right? It's so easy to manipulate the markets because there's no buyers and there's no sellers. And that's when liquidation hunters go out and actually land up making a whole lot of money. When I looked at this pullback, the one thing that I noted was how we had pretty much just pulled back to the same level that we were a week ago at this time. So if you look at like the weekly candle, that's last week's candle. Now, what you'll notice about last week's candle is that actually last week's candle would have been lower, right? Or would have closed lower. But then in the last minute, in the death, we had Trump tweet this strategic reserve tweet, right? So this was last Sunday. Trump tweeted the strategic reserve tweet, and then effectively what he did was he made us close higher. But theoretically, if Trump hadn't tweeted a week ago, then basically I think we would have closed at the same level, and we probably could have been lower. So what Trump's tweet did, it basically just set us back by 1 week. And if you look at, like, we closed this week more or less where we probably would have closed last week had Trump not given us that true social tweet. Anyway, the truth is, reality is that it's not actually, this is much, much, much bigger than crypto. I know that we're all here and we're crying and we're complaining about our crypto bags, but this is actually much, 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 much bigger than crypto. This is actually about stock markets and about wiping out a lot of value of the stock markets. And this is why I think that this might get a whole lot worse, because I think that this is part of a Trump master plan. And the master plan is actually designed to inflict a lot of pain on markets. And I think it's affecting, I mean, if you look at it, it really is affecting a whole lot of all the markets, not stock markets. If you look at Tesla, so I just want to give you like one example. Tesla's down another 5.63% today. And just to give you an idea, if you take Tesla from its top, Tesla's down 49.18%. So Tesla's down 50%. And I'm assuming that this pain continues now. If I look at the NASDAQ, I mean, we were waiting for the markets to open, and down another 1.65%. So it really is becoming clear that what is going on in the markets now is part of something much, much, much bigger than crypto. This is about a master plan by Trump to actually crash markets. And that's exactly what's happening. You can see that if you look at some of the darlings of the stock market, you got NVIDIA down another 3% today. But if you take NVIDIA from its high to where we are today, it's down 30%. Now, I just want to give you an idea of how big it is. 30% means that one stock has wiped out $1 trillion in market cap. Literally, one stock has wiped out $1 trillion of market cap, which is like 1/3 of the entire crypto market cap has been wiped out on NVIDIA. As I said to you, Tesla down 50%. The S&P 500, I guess after today, is down, let's have a look here. So the S&P 500 is down about 8%. But more importantly, the S&P 500 has now given back every single one of its gains that it made since Trump was actually elected. Same thing with the NASDAQ. So the NASDAQ also down. If you look at the NASDAQ top to bottom, down 12%. And again, if you look at where it is relative, the NASDAQ is now lower today than it was when Trump actually came into power. And so this is not a crypto thing. I know that for us, crypto, it's all about crypto, but this is something much bigger. This is part of a Trump plan to crash all markets. And in fact, when we look at Bitcoin is actually holding up phenomenally well, right? Because if you look at the traditional markets, TradFi markets have given up all their gains since November, right? In fact, as I said, the NASDAQ is now lower than it was on the 4th of November. And the same thing with the S&P 500. Bitcoin is still way above where it was on the 4th of November. There's the 4th of November. On the 4th of November, Bitcoin was at 68,500. We're still at 82,500, which means that we are still, let's just get the exact numbers here. We're still 20% higher than where we were on the 5th of November, which means that we've completely outperformed traditional stock markets, right? And there's a reason for that. The reason for that is because the market is pricing Bitcoin, only Bitcoin, as a tech stock, but also as a store of value. And if you look at the gold chart, which is the store of value chart, what you'll realize is that gold is actually pretty much like a few minutes away from all-time high. Like let's just see like what off all-time high. Gold is now 2% away from all-time highs, right? And so the reason why Bitcoin has been insulated throughout this whole correction of the Nasdaq, where the Nasdaq and the S&P 500 and all the other markets have gone back to pre-November 5th levels. The reason why Bitcoin is actually doing better and why Bitcoin is still 20% up is only because, in this case, investors are looking at Bitcoin like gold. And gold is actually going towards all-time highs. And that is why when you look at your Bitcoin bags and your altcoin bags, there's a massive disconnect, right? When you look at your Bitcoin bags, okay, you're still 20% up from November. I don't know about you, but my altcoin bags are absolutely smashed. Let's just have a look at Solana as like a proxy for altcoins. I'm not even going to use ETH. In fact, we can use ETH. But so if you look at where it was on the 5th of November, Solana was here. It's this week over here, right? So in fact, let's just go to a daily. I think it'll make it a bit easier. If we look at 5 November, let's go to 5 November. That's here. Solana was at about here. Solana was at 165. Solana's at 126. And that is the biggest and most reliable altcoin, so to speak. I can't even imagine what the rest of the, in fact, I can imagine because I know what my portfolio looks like. My portfolio is absolutely wrecked. Or the altcoins that I'm holding are down, way lower than they were before Trump came into power. Now, this is quite a big thing that we need to speak about. Again, the reason why that happened is because Bitcoin is tracking gold and the altcoins are tracking risk. And if you look at risk, let's just use Tesla as a proxy for risk, right? So if we use Tesla as a proxy for stock market risk, and we say that Tesla represents risk, and Tesla is down 40% off its high, and if we go back to November 5th, which would be, if we could just find November 5th, which would be October, it'll be somewhere around here, you can see that Tesla is now back at the pre-election levels. Altcoins are more correlated to Tesla, which represents a risk asset, than to Bitcoin, which represents a mix between a risk asset and a digital store of value. And that's why your altcoin bags have been absolutely wrecked. And your Bitcoin bag, if you're holding Bitcoin, or if the majority of your portfolio was in Bitcoin, you're not feeling the pain as much. The problem is that I know that the majority of people are actually holding altcoins because they wanted the outsized returns. And now, unfortunately, the risks have actually have come to play. So I think we need to understand now why this whole thing is actually happening. Because as I mentioned here, I don't think it's coincidental. I think the fact that markets are down 10, 11, 12%, I think the fact that markets are back to pre-election levels is not coincidental. In fact, I think it's all part of a massive game plan by Trump to actually reduce the markets, right? Or to crash the markets. I'm going to just say it plainly. It's a plan by Trump to actually crash the markets. And I think that if you listen to his interview with 𝗵𝗵𝗪𝗪 over here, where he said he's not actually watching the markets, you pretty much get a whole lot of clues as to what's going on here.
Is that what you meant? The stock market going down was the disruption? What other disruption were you alluding to?
Look, what I have to do is build a strong country. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters.
That's true.
And you can't go by that. You have to do what's right. What we're doing is we're building a tremendous foundation for the future. Tremendous foundation. I didn't buy it.
So on this interview, Trump basically said, look, he's not actually watching markets. And he said his objective here is actually to build a tremendous country. It's not about actually watching the markets. And that got the markets pretty scared. Let's talk about what he means by building a country, right? Or building a tremendous country. I guess the biggest problem that this tremendous country has right now is the national debt. You can see the US has got $36 trillion in national debt. That's not the worst part of it. The worst part of it is that if you think about this debt, 36 trillion is the entire debt number. But over 25% of it, $9.2 trillion of this debt is maturing this year and needs to be refinanced. So just imagine that you've got the total US debt, which is this number over here, which is the 36 or 37 trillion. Of that debt, over 25% of that debt, which is $9.2 trillion, is up for refinancing. So imagine that you've got a debt. Imagine that your debt is $9,200 and you need to refinance your debt. The problem is that if Trump now needs to refinance this debt, because he's in power and it's his administration that needs to finance this debt. If they're refinancing this $9.2 trillion worth of debt at today's interest, which is this interest over here, which is around 4.5%, just give or take. If they need to finance $9.2 trillion worth of debt at 4.5%, the reality is that the amount of strain that they're putting on the future cash flows of the United States, on the future growth of the United States, is absolutely, absolutely crazy, because the US would have to pay 4.5% a year on 4.5% a year on $9.2 trillion. That's like $500 billion in interest payments just on that debt. And so what Trump needs to do, he needs to reduce the interest rates so that he can refinance this debt in such a way that it's not going to really affect the United States as much. The problem is, how do you do that? The only way to do that is to reduce the interest rate, right? Problem is, how do you reduce the interest rate? Powell basically said he ain't going to reduce the interest rate. And so now there's a standoff, right? As Pompliano says, he says, Trump told Jerome Powell to cut interest rates. Powell didn't do it. Now Trump is trying to force Powell's hands by crashing asset prices. And it's become a game of chicken to see who will blink first, right? That's pretty much what's going on here. Right now, Trump wants to build this tremendous country. To build a tremendous country, what he needs is he needs to reduce the debt payments that the United States makes. Can't do it. There's $9.2 trillion of debt that needs to be refinanced. At 4.5%, refinancing that debt is absolute suicide. So the question is then, how do you actually reduce the interest rates? Specifically, how do you reduce interest rates in an environment where you have inflation, and inflation is not only sticky, but actually increasing month on month for the last couple of months? Like the last 1, 2, 3, 4. The last 4 readings have always been one higher than the other. So how do you get Powell to reduce interest rates? Where Powell's looking at 2 things. Powell's looking at unemployment and he's looking at inflation. And when you look at inflation, and inflation has been going up every single month for the last 4 months, how do you convince Powell to actually reduce interest rates? Well, the answer is, well, I don't know if it's pretty simple, but this is pretty much what the answer is. And this is what Trump's game is. The end game is to force the Fed's hand to reduce interest rates, right? How do you do it? Well, the way to do it is to scare people. And when I say to scare people, you've got to reduce sentiment so much that nobody wants to spend anymore and nobody wants to invest anymore. And when I say nobody, I mean specifically, you want big companies to get so scared that there could be a recession coming up, that they're not hiring people anymore, that they're not investing in the new project that they were going to start a year from now. You got to get those companies so scared that they stop spending. And one way to get to do that is to basically smash risk markets, right? So if you think of a company who's using their stocks or selling their shares to finance future growth, and all of a sudden their stock price looks something like that, how amenable do you think they would be to taking on the next project? How amenable do you think they would be to taking on another 100 staff members? The answer is that they'll probably not do it because they're so scared of what's about to happen. At the same time, if you think about the consumer side of this, consumers feel rich and spend a lot when markets are running. And if you look at markets today, I don't think many consumers are walking into Louis Vuitton or Gucci or whatever else and going to spend their millions and millions and millions that they've just made, right? I think those days are pretty much over, right? So I think that the way that Trump does this is by scaring the market. And the easiest way to scare the market is to get asset prices, and specifically liquid asset prices and stock prices, to fall. The thing is that as soon as this happens, companies will realize that they're not hiring many more people. They're not making many more investments. And therefore, number one, you'll get a higher unemployment. Number two, you'll get less spend. And if you get less spend, then of course you're going to get less inflation. The only problem with this plan is that they need the effects of this mindset change to be reflected in the data, right? So the problem is that it's not like happening from today to tomorrow. Trump cools down the markets today, so people invest less, people spend less, people get more scared. But it's not about doing it from today till tomorrow, because you need that fear to actually be reflected in the data. The problem is that data is always lagging, right? So we only get data 1 quarter, 1 month, 2 months, 3 months after the data or the stuff's actually happened, right? And so what Trump is pretty much trying to do is he's trying to scare the markets so much that the markets truly start to believe that there's going to be a recession coming up. And if he can scare Jerome Powell and the markets into believing that there's going to be a recession. Now, the one thing about recessions is that if people believe there is a recession, it becomes a self-fulfilling cycle. And the reason why that is because if you believe there's going to be a recession as a company, if your forecast is that there's going to be a recession, then what you say is, I'm going to protect capital and I'm going to spend as if a recession is imminent, right? And so the more people believe there's going to be a recession, the more they will spend as if a recession is coming. And if they spend as if a recession is coming, they usually cut their spend. And so what Trump is effectively trying to do is he's probably trying to, in a way, manipulate this poly market odds to such a point that people will believe that there is a recession, therefore they will spend less, therefore they will hire less, therefore the economy will cool down, and therefore Powell will be forced to reduce interest rate, because the last thing that Powell wants on his resume is that he was responsible to getting the US into a recession. And so when Trump was asked on his flight, I think it was last night, about a recession, I mean, you'll see how he dodges this question.
Where are we? Are we just...
He's about to land.
We're just about ready to land.
Are you worried about a recession? Maria Bartiromo asked you, and you kind of hesitated.
I'll tell you what, of course you hesitate. Who knows? All I know is this. We're going to take in hundreds of billions of dollars in tariffs, and we're going to become so rich, you're not going to know where to spend all that money. I'm telling you, you just watch. We're going to have jobs. We're going to have open factories. It's going to be great, and the plane is landing. And thank you for a lot of good questions. Okay?
So you see what happened? You see what basically happened? That he dodged the question around a recession because he doesn't want a recession, but he wants Powell to think that there's going to be a recession, so that Powell preempts it, because the last thing Powell wants to do is to be behind the market. So I think the market's right here, where they said President Trump's statement on not watching the market was telling. What he's clearly telling the market is that he is willing to do whatever it takes, including not watching the market, to reduce the rates and to lower the trade deficit, even if it involves going into a recession. Now, the one thing that I think everybody is scared of is what's happening in China right now. In China, they've actually gone backwards. So they've got deflation. Like if you look at their PPI, it's negative 2%. And if you look at their CPI, it's negative 0.7%. And so China has basically fired up the bazooka and is actually starting to stimulate. This is what Jerome Powell wants to avoid. And actually, this is probably what Trump is trying to engineer alongside Scott Bessent and all those other guys. Okay, so let's talk about the progress that they're actually making. So how much progress has Trump made? Remember, Trump's only been here for a very short period of time. And so all the effects of everything that he's done, we haven't yet got yet, right? But we do know a few things. Number one, we do know that the fear and greed in the traditional markets is 17, right? Now, remember, we said the big thing here is to actually engineer fear. Because if you engineer fear, basically what happens is you get into this extreme fear category. When the markets are here, this is when the markets don't actually land up investing because they're so scared. So let's look at the progress. One, they've managed to get the markets into extreme fear. Let's look at inflation. When it comes to inflation, Trueflation says that inflation is actually 1.39%. On this Wednesday, we have inflation numbers. If you look at the expectations so the last inflation reading was 3. And if you look at the expectations for this inflation, it's actually 2.9. So we're currently forecasting inflation to drop for the first time in 5 months. To make things even better, if you look at the Cleveland Fed, and they forecast inflation pretty well, they're looking at inflation being 2.83. Now, 2.83 is just under, so maybe they'll round it off to 2.8. I don't know if they'll round it off to 2.8 or 2.9. We could get inflation coming in at 2.8%, which could give us some kind of progress. At the same time, if you look at the US layoff announcements, and you look at the candle on the US layoff announcement, you can see that as Dan Tapiero says, he says, unfortunately, this is clear. Layoffs have never spiked to this degree outside of recessions. Fourth largest spike in 25 years and more coming. Uncertainty causing markets to slow down much more than anticipated, right? So they in fact, this whole master plan, all this uncertainty has actually caused people to be so scared that they actually start laying off people very, very, very quickly. On top of that, they have managed to slow down GDP. Remember that we had this the Atlanta Fed's forecast for GDP. They are now forecasting GDP to be negative 2.4%. Wait, when does this reading actually come out? The estimate. Let's find out. Okay, so we'll find out. But what you can see is that you can see that currently the Atlanta Fed is forecasting a GDP slowdown of negative 2.4%. So not only are they saying that the markets are going to slow down, but they've done a U-turn, because the previous GDP was positive, and now they're talking about it swinging to negative. So that's a massive, massive, massive swing. The real indicator of what the markets believe is the markets themselves, right? And if you look at what the markets are telling you, if you look at the US government bond 10-year treasury yield, right? The yield last week dropped quite a bit, or in the last couple of weeks has dropped quite a bit. Now, the reason why the yield has dropped quite a bit, or there are two reasons. One is because Doge is cutting spend, but two, because of this terrible word called a recession. And they're saying if there's a recession on the horizon, Powell's going to have to reduce rates, and therefore yields on debt are actually starting to come down. When the yields come down, the dollar crashes, because nobody wants dollars anymore. Because if the yields are coming down, what do you want dollars for? Because if you're going to invest them, you're going to earn less yield. And so you can see that the markets are starting to believe that this is starting to have effect. In other words, they're starting to believe that people are getting really, really scared. And what you got to remember is that markets are actually forward-looking, right? So markets look one period forward, or at least one period forward. And so here what the markets are telling you is they're starting to see the pain, but these markets are starting to show you that they're starting to see through the pain. So the treasury yield dropping and the 𝗲𝗂𝒅 dropping, the current markets are starting to feel pain, but these 10-year markets are starting to tell you that, hold on a second, they're looking straight through the pain. Now let's talk about how long this will last. Okay, so let's talk about how long this could actually last, and whether or not we're actually in a bear market. Because I do see a lot of posts on Twitter and a whole lot of other places saying we're actually in a bear market. We're in a bear market. Nobody wants to believe it. Lark, do you think the bull market's over? I think I read something from 𝗀𝗀𝗪𝗏, which he said something like he refuses to believe that there's going to be that we're in a bull market, in a bear market, right? So the question is, first of all, are we in a bear market? And two, how long is this pain going to actually last for? So as I said in my tweet over the weekend, I said, look, the problem with this is that we all want things to resolve themselves now. The problem is that that's not how it works. This needs to go for so long that it actually gets reflected in the data, right? And that means that it's going to go for at least a month, and if not a month, for at least a quarter, right? Why? Because you need it to be reflected in the data. Data is measured in months and quarters, right? So to think that this is going to resolve itself in the next day, week, probably not. The question is not when it will resolve, but when you believe that markets will look forward enough and see it resolving in the future. So, right, it's not about identifying when the cuts will come. It is about identifying, or when the data that will force the cuts will come. It is about identifying when markets will see in future the data being able to coming. So that's pretty much what you're looking for. Now let's talk about actual levels and stuff like that. So the first thing is, got to remember that even though the NASDAQ is down a lot, it's down from its wick high to where we are today. It is down 11.5%. You still got to remember that if you look at it from January 2024, which is just give it like a year, we're still up 20% in 1 year on the NASDAQ. And so from a traditional markets point of view, the traditional markets can actually take more pain. And I would argue that Trump actually even wants them to take more pain, because the more pain, the quicker Powell will reduce the interest rates, the easier he can refinance the debt. And I don't think that Trump's looking to refinance the debt at 50 basis points off. I think Trump is looking to refinance the debt at crazy numbers off, right? So then we look at Bitcoin and we say, okay, well, how low can we go on Bitcoin? So my theory around Bitcoin is that this level is the next critical level. And when I say the next critical level is around this $70,000 to $73,000 level. Why have I specifically picked that level? Because TradFi markets have pretty much given back all their gains, right? They've given all their gains back to 5th of November. Bitcoin hasn't. Now, if Bitcoin goes back to these levels, then I've got to ask myself a question. A, is it going to bounce? Or B, are we actually going into this long bear market? So let me go through what I mean here. When I look at the previous administration, in this period over here, for most of this period, we believe that the previous administration was actually going to be in power. Like, I don't know if you remember, but the odds swung towards 𝗂𝗪𝗧. We all thought 𝗂𝗪𝗧 was going to win, or there was a greater than 50% chance that 𝗂𝗪𝗧 was going to win. And we, in this period here, we imagined that we were going to go through 4 more years of the hell that we went through with the previous administration, right? And so the reality is that if we get to these levels, and we don't have a significant bounce, and we break down below these levels, then I've got to say, you know what? Thesis overruled. We're in a bear market, and I don't know how long this bear market's going to last. But I don't think that's the case. And I'll tell you why. I don't even think we'll get there, but we could. What I think doesn't matter. We may or may not get there. The truth is, though, that if we get to anywhere near these levels, and we say, hold on a second, Bitcoin is at the same levels that it was with the previous administration. The only thing is that the previous administration is not there anymore, and the administration that is here is this administration.
Welcome to the first ever White House Digital Asset Summit. Last year, I promised to make America the Bitcoin superpower of the world, and we're taking historic action to deliver on that promise.
Your administration is moving at tech speed.
We are going to keep the U.S. the dominant reserve currency in the world, and we will use stable coins to do that.
Technology is at the foundation of the Trump presidency.
This is truly a historic day, and as a crypto founder, I couldn't be more proud to be part of your administration.
No one in this room could have envisioned this just a couple years ago.
We want to stay at the forefront of everything. This is a big day. Being in the White House is a big deal, and you have great support. Thank you all very much. Thank you.
So we're talking about the reason why I say that if we break down below this level over here is if you're going to tell me that even though we're with the new administration, and even though the new administration is not only crypto friendly, but actually crypto hungry, if you're going to tell me that we break down below those levels with a new administration that's actually in power, then I've got to say to you, the only explanation that I can do that is the fact that that this is the beginning of a bear market. Otherwise, I believe that what's going to happen is at some point, the stock markets are going to have enough pain. And I don't know whether that's 10% down, 15% down. I don't know when that there is enough fear. I do know that your only job now is to survive that. Because when the markets actually turn, remember the markets are going to turn because the market is seeing that rate cuts are coming and that there's going to be a bazooka to stimulate the economy. Now, speaking of bazookas stimulating the economy, I've said this to you guys before, and I'm going to say it to you guys again. The one country that has actually implemented the bazooka to stimulate the economy is China. And this is what's happening on the Chinese markets, right? So the idea is to say, all you've got to do now is you have to survive to the point, survive and buy good quality assets that you're willing to hold into the next part of the cycle, or if it's a bear market, right through the bear market. But ultimately, that is your only job right now. Nothing else. You've got to just survive and do that, knowing that we kind of know what Trump's master plan is, right? We know what the plan is. I've just spelled out the plan for you. If I'm right here, the reason why I don't think I'm wrong is because I think Trump's very, very smart. And I don't think that Trump is going to allow for markets to absolutely collapse. He's got to get them to collapse just enough for the Fed to start loosening. And then basically we can get the show back, the show on the road again. So all you need to do is basically survive and accumulate good quality alts that you're willing to hold multi-cycle. I see someone here, a friend of mine, I'm not going to mention names. He says, you're wrong. The Fed doesn't want to save the economy. They'll sacrifice a recession to stick it to Trump. They just want to fight inflation. Okay, well, let's see who's right. Either I'm right or he's right. I'm not going to mention his name because I don't think he wants me to mention his name. Anyway, I will see you guys again tomorrow. Until then. Remember, guys, remember, if you're not in the USA, we're starting 1 hour earlier, right? So if you're not in the USA, we're starting 1 hour earlier. Also, before we go, remember that there are now 7 days and 22 hours to sign up for Eric Krown's course, which you can see is going to cost $2,000 the next time that it comes live. There's a link below. You got 7 days to sign up if you want this course for free. Krown is a fucking fantastic trader. He's not part of the banter host, but he's an amazing, amazing, amazing trader. And I really think that if you can get into this course, get into this course. Anyway, see you guys again tomorrow. Till then, trade well, my friends.